Hey traders, welcome to Charts and Coffee. Good morning. Happy Tuesday. We are motoring into really what we'd consider to be our last real trading day of this week. And here's why I say that. Obviously, Thursday, bank holiday for Thanksgiving. Friday is a half day. Let's face it, it's a 4-day weekend for most traders. There's no data releases that would compel a trader to have to be even remotely at the desk to deal with Friday's action. And then today really is the last day where we're going to really deal with probably a lower volume, but full session, because tomorrow, Wednesday, a lot of folks are going to check out by lunchtime. Europe's going to be closed, UK is going to be closed, and folks will start to check out into lunchtime, going into really what we could consider to be a 4-day holiday when you really think about participation and attention. So what that means is this is not the week to be thinking about necessarily all the bigger picture ramifications of price action and whether or not something's up or down, having necessarily meaningful levels as we go into next week. After we get through the second big holiday of the week, Black Friday, then we will go broke saving money, right? Who doesn't love Black Friday? As we go into next week, everyone's back. Tryptophan is worn off. We get back to work, and the work to be done is window dressing. So we're not changing what we expect of this environment. I'm looking at Walmart right now, mainly because we just put a position on that yesterday. But generally speaking, we're continuing to look at the long side of the indices, alongside really one of the ones that I'm in hot pursuit of is the Russell regional banks, and even individual names like Zion. Great place to be looking for follow through. Great place to be looking for end of year follow through to the upside because of the strong quarter that it's had. Another place where the strength is coming on rather fresh, although it's going to be very vulnerable, and that's going to be things like energy. So we'll be keeping a really close eye on energy, Chevron. This is not necessarily the increased price of natural gas and crude oil, although Natty is having a heck of a, as you can see, month. This is not a matter of the commodities leading the charge for these stocks to go higher. In fact, Natty's the only one that's up. Crude is lagging well behind, but clearly the way in which traders and investors are looking at likely the shift in regulation. Same thing's happening to financials. There's probably definitely an XLE and XLF type move based on expectations for what life will be like come 2025. And of course, the market is always a forward-looking machine. And I would say regulation shifts are likely the reason for these moves. And we can see the trend that's evolved from that. I won't always know. We won't always know what the market is thinking, but we can see what it's doing. We can see if there's inflows. We can see if there's volume and trends and support, higher highs and higher lows. So at the end of the day, while we may not know the specific news, the detail, there's always this pursuit of, well, I heard this. Make sure whatever the piece of news is being confirmed by price. If that piece of news, if that story, if that rumor, whatever it is bullish in nature, at the end of the day, we need to see inflows. We need to see support. We need to see volume. We need to see higher highs for that to be playing out, because that's why we care. We care because we expect that rumor, that news, that headline to play out in the market, and we want to participate. And those are the kind of things that, as long as we check it with price, as long as we make sure that there's a checks and balances between what we think could happen and what we actually see happening, we'll always be fine. Overall, we'll be fine. All right, we won't be chasing stories and fairy tales. All right. At the end of the day, what do we want to be? We want to be long. If I take a look at my overall book, it has a lot of long positions in the stocks that are leading in the strongest sectors. I mean, that's it. Folks always say, Rag, what are you trading? What's your favorite symbol? I don't have one, right? It's always a matter of what is the strongest sector and what are the strongest stocks and where would I consider the best trends to be. and then buy the dip on those trends. That's really it. Anything more than that is really complicating something that is relatively simple. We're all after continuation. And I don't mean, oh, look, today this choppy stock, I don't know, maybe it's Apple. Oh, look, today Apple had an up day. Okay, great. But there are far better names. In fact, let's just take the P and the L off Apple and go to Alcoa. That's what I want. See the difference? And it's subtle, but see the difference? That's the difference between, hey, Apple had a good day, right? And chances are, if we're going to see some window dressing, maybe it does. Nasdaq's heading higher, maybe it benefits. But are we going to be better off waiting for that final move where Apple gets out of its own way after all of this nonsense, right, for the last month? Or is something like this that's been climbing higher, dip up, is that going to be what grows our account, right? And that's just, looking at Apple versus Alcoa. Alcoa is a strong name in a strong sector. It happens to be metals and mining. That's the process, gang. Rinse and repeat. Keep it steady. Keep it simple. There are no favorite symbols. It's really easy to see where traders are, learning, because I've been there, we've all been there, how to trade, because they tend to focus on one or two symbols. And that's not really the way in which we want to trade. We want to focus on where the follow through is. And sometimes it might be the Russell, and sometimes it might be the NASDAQ, and sometimes it might be metals and mining, whatever it is. But to focus on a single symbol is actually really forcing that symbol to help grow our account, not looking at what's most likely to grow our account, right? Okay. That being said, that's where we're at. But what else do we have? Well, in the interest of growing the account, what else are we doing? We're long financials, right? We're long XLF. We're long Wells Fargo. That's what a trend looks like, right? So would you rather be in the Apples or whatever? I'm just trying to pick a magnificent seven that's behaving. Would you rather be in NVIDIA? Who the heck buys that right now? Is it in a strong sector? No, right? Semiconductors are not strong right now. They're actually the least strength right now of the top performing sectors. I think they're at the very bottom. They're barely positive. They're not in any way a strong in terms of the list of strength names at the top of the list, not even close. So even before looking at something like NVIDIA, which is not awful, don't get me wrong, but if we don't use the filter of, is this an outperforming sector, we'll get caught up in buying this supposedly on a dip. And, look, what happens on a day like this? You buy it, and then what's going to happen? I promise you, you're going to end up adding, you end up increasing the position size, because heaven forbid there's a stop loss, right? We want to be able to focus on things that have the movement to go higher. So you know what? Let me show you, right? Rather than telling you, let me show you. So the easiest way to do this is jump on over to, hang on, let me jump on over here. There it is. Okay. This is your normalized performance quarter to date. And look at where SMH is. Quarter to date, it's down. Oh, no, quarter to date, it's actually down. I think month to date, it's minorly up, right? Yeah, 0.82 month to date. Quarter to date, it's down. This means if an individual stock in that sector is going to outperform, it has to buck the tide. Doable? Yes. Probable? Probably not. Or it's going to be a lot more work. Look at what's sitting at the top of the list. Sectors that most folks aren't probably looking at or talking about. Regional banks, airlines. They will be now, right? We're going to point them out. Yeah. Financials, energy, consumer discretionary. If you want to be bullish anywhere in tech, focus on consumer discretionary. This is why we have long positions in Amazon, right? This is why we have a long position in Amazon. Because at the end of the day, if something's going to be able to move higher, it's going to be something that has been generally bullish and is in a bullish sector. What else is in that group? I think, it's oftentimes a fan favorite. Look at Tesla, right? I'm not trading Tesla. I'm in Amazon, but consumer discretionary would be a great way. Finding dips in the XLY ETF to buy calls would be a great way to take advantage of both Amazon and Tesla. You get a twofer, right? You get a twofer by looking at that. What do we want to avoid? Let's just start off with what do we want to avoid? Anything at the bottom of the list. I don't want to focus on sectors that are underperforming. What are the underperformers? Really simple, right? If weakness is going to get weaker and you want to be long puts, great. Do it in gold miners, do it in healthcare, basic materials, staples. I know Walmart's kind of an exception. I'm a little nervous. I will tell you, it's a relative outperformer. Costco and Walmart are the strongest two stocks, but I'm being a little, I put a small position on a Walmart, even though it's a relative outperformer. And that's when I will keep a very tight leash on. So I want to be perfectly straight up. Can you do it? Yes. Is it lower probability or at least a tougher climb? Yes, but Walmart's an uptrend and in fuego. So, balance it out. Semiconductors, here we have home builders, real estate, and utilities. Those are going to not be necessarily where I want to be looking long. If I want to look short, I would focus on gold miners, healthcare, basic materials. I would say those are your top three weakest. And I would say if you really want to narrow it down to two very weak sectors where it's just at this point, good money chasing bad ideas to the long side, but good money chasing good ideas to the short side, that would be gold miners and healthcare. And then again, anything up, really anything above zero in your top three here, carry jets, financials. Right after that, you've got oil and gas, explorers, consumer discretionary, energy, and insurance. One of the positions that we have right now, based on that strength in KIE. Look, I can't even tell you if I've ever traded Lincoln National before. What do I care, right? I don't think I actually have. I have a long position in Lincoln National right now. Why? Because insurance, KIE, is a relative outperforming sector. It's a top 5 sector, and this is the strongest stock in the group. It has adequate liquidity, really good pricing on the options. Boom, that's a position. Not my favorite. I don't even know it, right? I'm not even really that familiar with the nuance and the fundamentals and whatever else. Who cares? It's in a trend. Someone else has done that work. Someone else has decided to buy it. That's what we're going to watch. We're going to watch the behavior. We're going to watch the inflows. We're going to watch the volume. Yeah. And ultimately the trend. Okay. So what else do we have here? Lever asks, with XLB heading down, yes, great question, great timing. Down since mid-October and the tendency of weakness to get weaker right now, would I consider a short the rip in something like LIB? I'll tell you this, Lever, the only reason, and by the way, yes, if you want to do something like that and there's adequate open interest on the put side of an at or slightly in the money put, go for it. But here's what I'll say. The reason I'm not, and look, I'll be the first one to admit, some of the smartest trades right now would be to buy puts, and it has been for months, in things like Merck, right? In things like, what else is heading straight down? Danaher, right? Pfizer. These are places where you get long puts. I mean, this is ludicrous to think that there's a long position here, right? Maybe next year when we might see some sector rotation, but imagine what this looks like, right? If you're trying to buy and you don't have a stop loss, max debit, adding, rolling, all the things that ultimately are not going to be a productive style of trading. However, to Lever's point, right? If you're going to take a weak sector like basic materials or healthcare, and you're going to look for an opportunity to get long puts, here's my issue, Lever. And you're right, weakness will get weaker. That's what I focus on. But I'm going to avoid that because the bottom line is the indices are moving higher and there's far more to buy the dip on. And that's what I'd rather do, right? I'd rather, if our capital, can we agree, is super finite. We don't have endless supplies of money to put to work. So the way I'm looking to look at it is 2/3 of this list is in the positive. And that means that it's going to follow along with the strength I'm seeing in the indices. And that means for me, I'd rather be buying the dip. But to your point, yes, if you want to go in the, if you want to go with the short side or put side, if you will, buying puts in those places, those would be the places to do it. But I won't be. I'm not in any puts right now. I don't think I've bought a put as a swing in months. I mean, right now, as I mentioned, we've got 8 open positions right now, 8 open swings. When we sent out the recap, I believe it was 8, and all of them are long calls. All of them are long calls. All right. So let's jump on over to our NASDAQ and our Dow here. We're about 14 minutes before the bell rings. and take a peek. NASDAQ continued. It's not pretty, and this is not a trend, right? If there's a sector that I like the least, it's technology and semiconductor. So there's two sectors, and that's going to be most heavily weighted and weighing on, quite literally, the NASDAQ. With financials up, this is why the S&P is outperforming the NASDAQ. The sectors within it, the cylinders of that motor, right, are outperforming, and therefore S&P and even Dow are looking better than the Nas. Dow just punched up to a new high, brand new high, gang. So yeah, I want to be long calls. And that's what we've been doing. Frankly, that's what we've been doing all year. This is not suddenly let's get bullish. And it's not let's be bullish today and bullish tomorrow. And how many times have we watched or read analysis where one week someone's bearish, the next week someone's bullish, the next day that you can't trade like that, especially if you're swing trading. You're going to find yourself flip-flopping and trading your way right out of potential winners rather than sticking with the macroeconomic reality of lower rates, which is driven most of the year, and the fact that we continue to see the uptrends at all-time highs on the indices. All-time highs are never bearish, right? So we want to continue to buy the dip. But where, right? Russell, because KRE strength, the regional bank strength, Dow and S&P because of financials strength and energy. And the NASDAQ actually consequently becomes tech, the least interesting part of the broader averages, right? Probably the least interesting part of it. Scott asks, was LNC a mean reversion? I believe so. I can't remember exactly. Did we do a mean reversion on that one? Yeah, it was a mean reversion. Let's see. Next up, random hypothetical. Okay. This would be a fun way, I guess, to end the session. You hit the lottery for $5 million. That's all? Okay. But you must invest the entirety of it into either Bitcoin or the S&P 500. And you can't touch the investment for 10 years. What would I choose? The S&P 500. That's easy. I have Bitcoin. And I won't even say the price. It's a ludicrous price. I'll just say I've been in it since 2016. So it's not as if I'm not a Bitcoin believer. I have them. I have a great cost basis. But if you told me 10 years, S&P 500, the longer that time is, though, look, I know right now we're hearing about people who bought things, and they've got coins from 1,000 or 5,000 or whatever. I get it. I don't know how the Bitcoin narrative ends, but if someone said that I'm going to put money to work, and you had to choose, I'm going to always go with the S&P. Yeah. And the longer that period of time is, the more I'll go with the S&P. By the way, luckily we don't have to make those decisions. It doesn't have to be that binary. So luckily, if I had that 5 million, yeah, put 20% in Bitcoin, put the other 80% in the S&P. Luckily, we don't have to do that, but I would always favor the S&P. All right, gang. I will see you all tomorrow. Same time, same station. Oh, and by the way, I would definitely do it because here's where they're both lousy timing. I don't want to buy either at all-time highs, right? I don't want to do either at all-time highs. So the third thing is, would I just sit and maybe buy some other things that could move higher, like healthcare if I've got 10 years, right? That's another part of it too. Be good to each other, gang. I'll see you tomorrow. Same time, same station.